Just over a week ago, we had a look ahead to Netflix earnings. These have come out, so how has the market reacted? Hello, I'm David Jones. I've been a technical analyst in financial markets for the last 25 years. I thought we'd do an update on Netflix. Their earnings came out in the last 24 hours. Before we get into it, let's have a quick catch up with how the market has reacted. They did move higher in after hours trading, but let's see how they're getting on as trading has started in New York. I'll come back, talk a bit more about the earnings that they revealed, then we'll go back into the chart and look at things in a lot more detail. So US markets have been open about 25 minutes and this is what's going on with Netflix. So the Netflix shares last night in official trading ended up closing just above 286. We did see them gap higher when those earnings came out. And this is where we are now. So they've pushed up to 308. I think they were 322 last night in after hours trading. And we're filling some of that gap. We're back below $300. But let's just take a look at where this puts us from a historical point of view. So as trading's got underway, we've seen Netflix push to its best level in over a month. We're going to come back and look at this in a lot more detail in a couple of minutes' time. Let me talk about the earnings first. Then we'll come back on the chart and see what this means for Netflix medium term. So Netflix reported earnings of $1.47 earnings per share over the previous 3 months. If you go back a year for the same period, that compares to just 89 cents a share. So it's a big improvement ahead of expectations. Subscriber numbers were solid as well. Last time around, we saw the shares really heavily hit on disappointing subscriber numbers. This time around though, they've revealed they added just under 7 million subscribers in the previous 3 months. This was a good number. It has still missed though the US subscriber target, so they're doing well in other parts of the world, slightly lower though than what was expected for their home market. But investors didn't really care. We saw the shares jump about 10% in after hours trading. Of course, in November, we see some serious competition for Netflix with the likes of Disney and Apple going live with their streaming services. We're going to take a look at the share in a second, but first of all, let's just catch up with the big levels to watch now over the medium term. So the really big one is miles away still at the moment, $423 a share. That's the all-time highs. A little bit closer in, $386 a share, the highs for this year so far. And then after that, I think the next big hurdle, $336 a share. That was the high left in late July. After they gapped lower on those earnings, they bounced back and then the share price pushed lower. So that's the next hurdle, I think, for Netflix on the upside. I think the most immediate support we've got on the daily chart, $265 a share. It's quite a way away from where it is now, but that was only set earlier this month. It shows how far they've moved. Then $252 a share, the September low, and the really big one, if we did see the price sell off hard, we've got to look at last December's lows around about $231 a share. But let's jump back on the chart and see how trading is going and have a look at what the next few months could hold for Netflix. So I thought let's start with the big picture view. When we looked at these ahead of earnings, I was looking at this major trend going back to 2016, and I was saying, well, with them falling out of the trend, it had done such a good job all the way up this trend line, and we've seen them fall out of the trend in September. And I was saying, well, maybe that's just a false break. Let's take it as a false break for now and still be bullish on the stock. So far that view has played out. Let's just zoom in though on the big levels to watch from here. So we have the lows from late last year, December last year. They're way away from where we're trading now, but down around $230 a share. Clearly, we've seen the stock push up to 385 this year. But I do wonder if the strength we've seen after these earnings and the recovery since mid-September does suggest there are more gains to come for Netflix. These were Netflix last earnings. We covered these in the previous video, and we saw this gap lower on those disappointing subscriber numbers. We saw the market rally a bit. I mentioned that resistance level from late July. And since then, this trend line has done a pretty good job of keeping the price down until the last week or so. We've seen it start to move above the trend. Okay, it's giving up those gains overnight, giving up some of those gains that we saw on the earnings. And I think the interesting thing now is how far this sell-off goes. If we're going to see this recovery hold, let's just take a look at that in a bit more detail and watch the big levels to keep an eye on. So this Netflix recovery has been chugging along for about 3 weeks now. Even if we pushed back another $20–30 from here, it doesn't change that recovery. I think we've got big support coming in ahead of these lows from the 9th of October, around about the 264 level. Then we have 257 shorter term lows, and then back to those big 252 lows I mentioned. So for me, I think it's interesting to watch it, see where it settles down here after these earnings. Clearly it's pretty overbought on the RSI. We've got a 10-day RSI there. Not surprising, the market's overbought after the gap up on the earnings. But for me, I still think we can expect the stock to push higher, wait for it to settle down, see the buyers come back in, and maybe we'll have another push back up targeting 300 plus. So for me, I think it's only if we start to lose, at the very least, I think that the 264 level, this trend line support, that we have to worry about a deeper sell-off in Netflix. So a bit of a knee-jerk sell-off in the first half hour of trading. It's going to be really interesting to see where it finishes. We'll come back to Netflix in the future and see how this recovery has progressed. That's it for this update. We'll come back to it next earnings. Of course, to never miss out on our content, make sure you're subscribed, click the alarm bell notification, and you get a message off YouTube whenever we upload fresh content on US stocks. But from me, David Jones, we'll leave it there. So good luck with your trading.